morning. It's Rob Murphy here of Edison Investment Research. I'm head of investment companies. And today I'm very pleased to be able to have Jim Mellon on the call. Jim is a well-known author, investor, entrepreneur, and a co-founder of Agronomics. And that's the company we're going to talk about today. For those who aren't aware, Agronomics is actually investing in cellular food. It was originally IPO'd back in 2011, where it was more focused on biopharma investments, but has more recently moved towards the new tech in agriculture. It has a market cap of 217 million and successfully raised just under 63 million back in May this year. So welcome, Jim.
Thank you, Rob. I appreciate being on this Edison webinar and love working with you guys.
Great. So let's just kick off. I mean, the main area of Agronomics focus is cellular meat. So please, Jim, just tell us, what is cellular meat?
Yeah, well, a mild correction on that one. It's not just cellular meat, it's cellular foods of all types, and also cellular materials, which, if you like, I can talk about later on. But let me just describe the meat opportunity, because that was the central thesis which kicked us off, if you want to put it that way. The easiest way of me describing this is that it comes from a biotech process. And my background, and that of Anthony Chow, who's my co-founder and has worked with me for over 15 years now, has been in biotech in the last decade and a half. And together with partners, we've created a number of biotech companies. One was listed in the UK. It spun off its assets to its shareholders, was very successful, called Salvarex. And then we have two listed ones in the US. One's called Portage, which is a cancer-related company. It's a few $100 million in market cap. And then the other one is Biohaven, which we started 5 years ago and has a drug on the market now in the US for migraine. It's the best-selling drug for migraine in the US. And that's around $10 billion in market cap. So the biotech has been great for us. And when I was reading about this cell ag stuff at the very earliest days, I realized that it's actually a biotech process to produce foods in laboratories and ultimately in factories. And in a very brief nutshell, the way it works is, and this is a great simplification, but there are plenty of places people can read in more detail about this. You take a sample from a living animal, the animal doesn't get slaughtered, which is roughly equivalent to the size of my little fingernail. That sample goes into what are called bioreactors, which are stainless steel tubes. And the stem cells in that sample, and the stem cells are things that all living species, including human beings, have, that are precursor cells. They tell the body which way to grow. And we are looking in meat for fat and muscle cells. So you extract the stem cells related to fat and muscle. You bathe them in this bioreactor in nutrients, which are equivalent, roughly speaking, to what a cow would eat in a feedlot or in a field. And you introduce growth factors, which are not GM, they're just natural growth factors that encourage the cells to multiply and to divide. So that after 40 days, my little fingernail produces the equivalent of 3,000 kilos of beef of the highest quality, with no antibiotics, no hormones, no bad stuff. Whereas it would take 28 months to grow the equivalent 7 or 8 cows, which is roughly 3,000 kilos of beef on a feedlot in a farm. So the process is much faster, it's much cleaner, it's much better for the environment. It's obviously better for the animals who don't get killed, and it's better for human health as well. So it's a no-brainer as far as we're concerned. And all this stuff, the meat and everything else, is here today. And I can tell you yesterday, just yesterday, I tasted the first British meat that's been produced in situ in the UK in the form of a hot dog in a company called Ivy Farms. So I was the first person to taste it. I'm super excited about that. And no doubt they'll be making lots of announcements about that, but it was a really exciting moment for us.
So thanks for that, Jim. So what are the benefits of these new technologies? What's it going to do for society, the planet, and what's the potential size of the market?
Those are great questions. Essentially, if we're right, and these companies produce at scale, which they currently produce at low scale, but if they produce at big scale, we have the potential of producing high quality food and materials at lower prices than are currently prevalent in the shops around the world. And with a world's population heading towards 10 billion, and people in China and India in particular wanting to eat more animal protein, if we don't do something about stopping that increase in animal protein derived from intensively farmed animals, we're going to face an ecological disaster, which is even greater than the one that we're talking about at the moment. Because animal farming accounts for over 20% of man-made emissions. It uses 80% of antibiotics, which builds up resistance to antibiotics in human beings with another pandemic risk potential. And it despoils water reserves. Beef in particular uses a hell of a lot of water. Animals account for the eating by animals of plants accounts for 70% of all crop production. And animals are really inefficient converters of protein to protein. So a cow is 25-to-1 in terms of input to output. A chicken is 9-to-1. And what we're doing in cell ag is 2.5-to-1. So uses a fraction of the land, fraction of the water, fraction of the energy, no animal slaughter involved, no hormones, no antibiotics. It's better for the environment in every respect. So it's a no-brainer. Now, addressable market size is enormous. As yet, as you know, Rob, not many people know about this, but it's here and now. The meat market around the world is $1.4 trillion a year on its own, which is roughly equivalent to the size of the economy of Spain, where I'm sitting at the moment. The dairy market, which is being completely disrupted at the moment, is $750 billion. It's a pretty big economy on its own. Fish market is somewhere between $200 and $300 billion. And of course, fish is being produced in labs and will be on the market in the United States next year. And then there's materials. So you've got leather, you've got cotton, you've got cocoa. There's a whole range of stuff that can be produced in laboratories more efficiently than conventional farming or the conventional manufacturing of some materials. So the total addressable market is $5 trillion, which is 2 times the size of the UK economy. So it's a very big prize for entrepreneurs out there. It's a very big prize for agronomics as well.
It is clearly, and that it's interesting given that opportunity. Obviously, we have Agronomics, a relatively sort of new company. Are there many other listed ways of investing in this sort of potentially huge theme?
That is another great question, and the answer is, as yet, no. And now, why is that? Well, when we started getting into this, and as you know, we reversed effectively agronomics into something that had been called Port Erin Biotech. And it was a shell company with about £2 million in it. Most of the assets have been distributed to the shareholders. When we started that process, the only other investors in the world in this field were philanthropists such as Jeremy Collar, Chris Kerr, Chuck Lowy from the United States. And they are investing and continue to invest on behalf of their foundations to improve animal welfare, which is a very noble aspiration and one that personally motivates me because we don't eat meat in this household. And so as yet, no one has come along and created an equivalent vehicle. Now, I know that there are some teams out there trying to, raise some funds, but there is no doubt that agronomics has a head start on this. And why does it have a head start? Because agronomics has the relationships with the key companies in this sector, which means that when they come to do the rounds of fundraising, as they all need to do because they're building up to scale, agronomics is at the front of the queue in terms of getting allocations, and Johnny come latelys are going to find it very difficult to invest as successfully as agronomics has. So look, the first time in my career, in every other industry I've ever been in, it's been highly competitive. I've got no doubt this will be competitive. At the moment, we see a clear open road for agronomics.
Brilliant. And you touched briefly, obviously, agronomics isn't just meat. So, I mean, you've made some announcements recently, but there's some interesting companies in there. There's the Vitro Labs, which looks at leather, and there's Formo, which is dairy, which are a couple of things you've touched on already. I mean, could you talk a little bit about some of those non-meat technologies that agronomics is investing in?
Yeah, so we just led the round on Vitro Labs, which is a California-based company, which makes leather in lab conditions. Now, most people don't realize this, but high quality leather is grown in Austria with calves. So the calves are slaughtered for their leather. And so the size of the leather is dictated by the size of the animal. In a lab, the leather is grown and it's identical to the best quality leather. It is the best quality leather. It's grown in any size you want. So there's no waste. There's no sort of cutting at the edges or anything like that. And furthermore, there's no damage, because cows and calves can damage themselves on barbed wire or get other sort of lesions or whatever that cause damage to the leather. And because the leather has no hair on it when it comes out, there's no intensive tanning process like there is with conventional leather. So already the prices are coming down to the level of, pretty close to the level of conventional leather, and undoubtedly go lower. And already that company is selling to the two biggest fashion houses in the world. So this is already on the market. And the founder I met the other day in London, called Ingvar, I honestly can't pronounce his last name, but he's called Ingvar. And he had a big piece of leather that he was showing around, which is, if you saw it, felt it, it's exactly the same as high quality leather you find in a handbag, for instance. So that's super exciting. In dairy, Formo, formerly known as Legendary, I much prefer the name Legendary, to be quite honest. But Formo is a Berlin-based company, and it has two competitors. One is Clara Foods and the other is Perfect Day. And there's a sort of equivalent company called, but not exactly competitor, called Noquo from Chile. These companies are using precision fermentation to produce the exact whey and casein that's found in cow's milk. So by next year, you're going to see these companies with their products on the market, be it yogurt, cheese, ice cream, milk, and it will be they're exactly the same as cow's milk, but with no cows attached to them. And already, as you know, Rob, the plant-based milks such as Oatly or the soy-based or almond-based milks have taken a very big market share in the US and in the UK. This is going to be the end of the dairy industry. So the one forecast I have very high degree of confidence is in 10 years' time, big herds of cows that are milked in a very cruel fashion, actually, will be gone, being completely replaced by plant-based alternatives or the new precision-based foods that we're talking about here.
Yeah, I mean, that's interesting. I know personally, actually, I actually drink a lot of non-dairy milk now. I just actually prefer it on some things like cereal and so forth. It tastes change, right?
Absolutely.
I think Oatly's looking to float, I think, aren't they, at some point as well?
They already have. They already have.
Yeah.
And their market capitalization is $10 billion US.
10 billion, yeah. Okay. Well, sorry, I should have
ran that shows you the scale of the opportunity.
Yeah.
That's a plant-based single product oat milk. I mean, of course, they've got oat yogurt and all that sort of stuff, but basically they're a single product company. Just imagine if Blue Nalu's fish becomes important in the marketplace, which I think it will. Just imagine if some of these meat companies become important in the market, and they've all got defensible IP, unlike most of the plant-based companies, the valuations that you're going to see on some of these companies. So it's okay, Agronomics may be 270 million pounds or whatever it is today, but honestly, I've never seen a better opportunity anywhere.
Yeah, we'll come on to that. But it's interesting that the two we just talked for. I mean, they're I think two of the largest in your portfolio already. Those two companies. So yeah, it's interesting. And I guess then the question a lot of people will ask is, well, you know, this is all great, this technology, but you know, is it going to be viable? And in your book, actually, for those who are interested, Jim's written a very interesting book on this agrarian revolution called Moore's Law. You talk about griddle parity, which I guess is a sort of measure, sort of a way of thinking about the cost of the technology. So, what's the main barrier to getting to scale for these companies?
So griddle parity is a riff. I mean, Moore's law is a riff off Moore's law,
Yes.
which most of your listeners will be familiar with. But griddle parity is a riff off grid parity, which is when the price of renewable energy comes down to the price of energy created by conventional methods, fossil fuels. It depends on the product. In the case of leather, I don't think we're very far off from that. In the case of fish, it's about 2 to 1 at the moment, but it will be at griddle parity, I think, within 2 years. In dairy, we're going to be at or below griddle parity by the end of next year. Meat will take a bit longer because it requires big scale up, and it requires the price of the inputs to come down. The 3 principal inputs are the bioreactors, the big stainless steel tubes, but they are coming down. The growth factors, and if I tell you, and this is true, that the growth factors, which were formerly millions of dollars per gram, have came down in price by 95% in the last 12 months. And that they were the key cost of the production. So the cost reduction is incredible. And then the last is the media, or the nutrients that these cells require to grow and to divide and amplify. And all of those prices are coming down. So the first cell ag burger was eaten on British TV, BBC actually, 2013. And I think it was Sergey Brin, founder of Google, who ate it. It was developed in Holland by Mark Post. And it costs about $400,000 for that one burger. Today, the burger is somewhere less than $8. And it doesn't take a genius to work out that within a couple of years, it's going to be at or lower than the price of the burgers that people buy in Tesco. And it's fairly obvious, you know, if you put in 2.5 to 1 to get 1 unit out rather than 25 to 1, you've got a pretty clear cost advantage, at least potential cost advantage.
Yeah, and I guess the other barrier is the, you know, the regulatory side. I mean, you've obviously got a portfolio. I mean, how risky is the field overall, and how will that risk change with sort of the regulators, your anticipated kind of regulatory overview?
Okay, this is an important question. So in terms of regulation, it again depends on the product. There is no regulation really for leather or materials because we don't eat them. And those materials include threads, they include collagen, etc. And of course, leather. But there is for food. And in the US, and the US leads the way in much of this stuff, the USDA, Department of Agriculture, and the FDA, which is the drug regulator, Food and Drug Administration, jointly regulate meat, but the FDA on its own regulates fish. So we think that the fish will be on the market by the beginning of next year. You know, we're almost there, right? So in 2022. Meat will be about 18 months away. It will be the same for novel foods in the European Union, and probably the same for the UK. We have some companies in the UK, but we're not a leader in the field yet, and we should be a leader because the opportunity is sky high, and we import half of our food. Some of the food insecure countries, such as the UAE or Arabian countries or Singapore, are ahead of the game. And in Singapore, you're already getting chicken nuggets by Just Eat on sale, which are cell-based chicken nuggets. And in Israel, Anthony Chow, who I think you know, my colleague at Agronomics, and his colleague Laura Turner have recently been there and eaten chicken nuggets from Supermeat, which is one of our portfolio companies, and they couldn't tell the difference. And you know, we're very close to mass commercialization of this stuff. This is This is not something that's 10 or 20 years away. We're here.
Yeah, that's quite an exciting prospect. And I think, is it the FDA? When do you think you might get the seafood? I think that's probably the first one that you're anticipating.
Beginning of next year.
Beginning of next year, yeah.
Yeah. This is a company called Blue Nalu, which is one of the, as I think you mentioned earlier, Rob, one of the key components of the Agronomics portfolio. I'm actually board observer on that one. And, you know, they're doing tuna fish. And we're not talking about the tuna you get in a sort of bumblebee can. It's, you know, the high-end tuna that the Japanese love to eat at vast prices. So there's a big price umbrella for them to address. And then they just scale up and scale up and scale up. And, you know, the iterative development of these companies will be absolutely incredible. Within a few years, you'll see plants that will cost about $100 million around the world that will produce enough protein for 100,000 people for 20 to 25 years. And I can tell you the returns on those plants will be excellent. So there's going to be a huge infusion of money into the sector. And already some of the big food companies are investing in the sector because they can see the writing on the wall.
Yeah, absolutely. I mean, maybe continue on Blue Nalu, because you've made, you've been very active recently. I mean, just this month, quite a lot of announcements for people who want to look at the various RNSs. But Blue Nalu has announced an agreement with Nomad Foods, which I mean, some people might recognize. You know, Bird's Eye, and Goodfellas Pizzas are some of their brands. So it's a very large European company. Do you think that, I guess they're more on the frozen side, do you think that will be the first area where Blue Nalu will potentially be producing food?
No, they have got a plant in San Diego in America. So the first will be for restaurant consumption in America. And then I think ultimately the European market it's a clever move. Nomad is a huge company. They get the automatic distribution, they get automatic validation. I don't know what the commercial terms are, but I assume that it'll be, you know, they'll be favorable. And more and more of this will be done. There'll be more joint ventures between companies such as Blue Nalu and big food producers. Those companies have the intellectual property, they have the know-how to make the stuff, and the big companies, it's a bit like biotech and big pharma, have the marketing skills, the breadth of distribution, the knowledge of how to deal with regulators. So we'll see more and more of these tie-ups. And actually, Rob, I think, to be quite honest, I would think that in the next few years, a lot of these companies will be bought by big food producers. So, you know, there's no time, you know, I meet some people saying, well, isn't this a bit early? And I say, well, by the time you invest in it, it will be too late. So, you know, you're either early or you're late, but it's better to be early.
And maybe finally, so another, just going back to the scalability and the, you're talking about the costs of the inputs. One of your other companies, Meatable, has a collaboration now with DSM in the Netherlands. Could you maybe just talk a little bit about that and how that might help the scalability of the product?
Well, DSM is an enormous, you know, food agricultural company. So I imagine their technology will be helpful to them. But I think that Meatable's other key technical agreement is with a British company called BitBio. And BitBio produces induced pluripotent stem cells that are stable. And this gives Meatable potentially an advantage over other meat companies because their cells will be immortalized. They don't need to go back to the animal for continuous samples. And that will improve, well, first of all, it's kind of great for animal welfare, but not that the animals are hurt when these samples are taken, but it's just better. And secondly, it means the production process will be continuous. There won't need to be an interruption to introduce new cell lines. So I think that this is, you know, you'll get more. I can't say what the announcements will be. I don't even know what the announcements will be, but you'll get more and more and more of these announcements as the next 2 or 3 years unfold. And obviously, we want, as the largest single investor in the world in this field, we want Agronomics. It's a British company to continue to be at the forefront. And you know, what a great opportunity for the UK. If only we would seize it. You know, this is really important for our country that we take advantage of this.
Brilliant. Well, thanks for that, Jim. That's been a really great roundup and introduction to agronomics, and we'll look forward to having on again, hopefully in the future when we get some more announcements.
Well, Rob, I appreciate it very much. And again, thank you to the team at Edison and everyone who's listening. Have a great weekend.
Thanks.
Thanks.